Good morning, everybody, and welcome to the Siler Wealth Management video blog. It's Tuesday morning, January 19th, and let's talk about what happened last week because we saw more carnage in the market. You know what? It's a good thing the markets weren't open yesterday because we needed some data to come out. It looks like we're going to rally this morning, but let's go back to last week. The Dow Jones, which is, remember, folks, only 30 stocks, did decline about 2.2%. The S&P 500, which is more indicative of what we talk about as the market, is the S&P 500, also down 2%. The real carnage came from the Nasdaq, which is biotechs really took a hit. Technology in general, the Nasdaq market was down 3.3%. So here's where we stand. We're down well over double digits from our highs in all the major averages. Now, keep in mind, let's go over definitions. The definition of a correction is a 10% decline from peak to trough. The definition of a bear market is a 20% decline. Okay, and bear markets typically can last 3 to 18 months on average. It's around 9 or 10 months is when a bear market lasts. I don't think we're in a bear market. Okay, I don't think we are now. Many stocks, because stocks can go in their own bear cycles, and many stocks off the S&P 500 are down 20% or more, and most of that really is in the materials and the energy sector. So let's talk about why. I mean, everybody's talking, well, oil is cheap, and people don't really understand that, gas is cheap. Why isn't that good for the economy? Well, there's a happy medium somewhere. And what's good for the consumer right now, and we've all taken basically a tax cut because gas has been so cheap. But what's happening is when 15% of the S&P 500, 75 stocks are in the energy and or materials industry, and we're starting to see some real declines in those stocks. In fact, it's inevitable that there'll be some energy stocks and energy companies going bankrupt. We saw Arch Coal, the second largest coal company in the country, file for bankruptcy a few weeks ago. That weighs on the overall stock market. So it's hard for the major average to go higher when 15% of that average is really on a serious decline. So that's problem number one. Not sure when that's going to get resolved because what's happening is the Saudis break even on oil is about $10 a share, $10 a barrel. So if they can pump oil out and sell it for 10.01, they're happy because they've got billions and billions and billions of dollars. Okay, what they're doing is trying to put our oil companies out of business because our oil companies cannot survive with oil at $30 a barrel. It just can't happen. And I've talked to a lot of oil experts, and they're saying really that's a problem for that sector. Now let's move on to China, which China has been a problem as well. Well, their GDP came out this morning early, and I was awake for that, and they grew 6.8% in the last quarter. Overall for the year, their economy grew at 6.9%. This was in line. It was expected. No surprise there. I think one thing we saw over the last couple of weeks is that there are some economists thinking, hey, they believe they're going to miss that number, and the Chinese economy is a lot worse than we really expected. So that came in line. So the other thing we're looking at here is earnings season. We're right getting started with earnings season, and so far, especially in the banking sector, which is a sector I really like a lot, the bank stocks have done very well. Wells Fargo, stock we own. JP Morgan had a really nice quarter. You're starting to see a lot of the other, Bank of America came out, beat expectations. So that's a good sign also. Keeping in mind, the Fed is a headwind. Okay, the Fed is in the way also. However, what we've seen over the last few weeks, I think is going to put the Fed on some limitations here. And I don't believe the Fed is going to raise 4 times. They're likely going to raise 2 times. And I got to tell you, there's a gentleman on CNBC who I respect. He's saying he thinks the Fed fund rate goes to 0 again before it goes to 1%. I don't see that happening. I don't see the Fed all of a sudden admitting they made a mistake. We raised a quarter, 25 basis points. Now we're going to drop it down to 0 again. I don't see that because I don't think 25 basis points makes that big of a difference. But when you look at the overall market, there's just been carnage everywhere. The FANG stocks, which is the Facebooks, Amazon, Netflix, and Google's, they took hits. But keep in mind, even though the markets were down last week, I go inside the markets and dissect it. And I look at certain things. Apple, flat on the week. In fact, up a few pennies on the week. So, yes, it was a roller coaster. But Apple, if you recall, even when the market was going down, was rallying early in the week. It took a hit later in the week, but ended up flat, actually slightly positive on the week. So that may be stabilizing. You had Netflix earnings coming out. We'll see how those turn out. But I got to tell you, I think that the market is getting very close to some sort of a low here. And I think you need to keep your powder dry. And I'm going to start doing a little bit of buying here for some clients with the liquidity. And what we'll do is that do a little bit of buying. If the market drops another 5%, we'll do a little bit more buying. But I think because you are never, ever, ever going to get lucky and catch the low, and you're never ever going to catch the high. And I keep saying that because I've been doing this. In fact, in May, I'll be starting my 29th year. Yes, I know I don't look that old, but I'll be doing this for 28 years, starting my 29th year. Rarely in my career have I caught the low and caught the highs. Very rarely. So what you have to look at here is that we're buying some pretty good companies at a deep discount. Could they become more of a discount? Yes. I mean, stocks are at a low. Could we see a whole new definition of low? Absolutely. But if you look at the overall paradigm, we're not in that bad a shape, and we are certainly not in a bear market environment. We are not in a financial collapse. This is not 2008. Okay, so I believe that there's some opportunity, and I think you start by looking at some of the financials. Okay, there's some really interesting opportunities in financials that pay some pretty good dividends. You look for the total return. Look for companies that are going to pay you 2-3% on your money and have some upside. That at least gives you a little bit of hedge against the downside. Okay, so that being said, I'm really pleased about all the sharing and all the new people that are watching this video. Thank you very much. And I'm really going to do some different things to it. I am getting ready to start a podcast. I have a YouTube channel too, by the way, that all my videos will be on there. So we have some really good things going on, and actually moving our office. I'm purchasing an office, so we're going to be moving very shortly. And what I'm going to start doing is very small events, 4 or 5 people to a quick luncheon conference, in and out during lunch or a little happy hour, 4 or 5 people at a time, so we can really get down and dirty and talk about investing 101, women in investing, college education type thing. So we're going to be doing a lot of that. So please stay tuned with what we're doing. The website is silerwealthmanagement.com or stockdr.com. 2 names, 1 location. That's being revamped as well. So we got a lot going on here, and I hope you enjoy this information. Please share my video, and I will be drawing for a cruise for 2 to the Bahamas on Thursday. I'm going to draw 2 of them on Thursday. So if you share, you'll get 2 entries in my green bucket. If you like it, if you like the video, you'll get 1 entry. So please share my videos. I really appreciate it. And market's indicating to be a 200-point open. We'll see if it holds. I don't get that enthusiastic right now because it has not been able to hold. However, I am going to start looking for some opportunity for some clients, and please feel free to call us if you are looking for opportunity or you need some help with some opportunity. I'm Lee Seiler, and talk to you soon. Bye.